Hello everyone, and today we will be discussing your personal balance sheet. A balance sheet can help you get a very good understanding of your financial position, and so preparing one should definitely be on your checklist. Luckily, it does not take long to create one, and the benefits can be huge. So what is a balance sheet? Well, there are two main parts to a balance sheet. The first part are the assets, or the things that you own. Pretty much anything that you fully control with a monetary value is an asset. And the second part are the liabilities, or the debts that you owe. In other words, you own assets and liabilities own you. There are many different kinds of assets, but there are two main categories of assets, liquid and illiquid. Liquid assets are assets that can quickly be converted into cash for their full value. Thus, cold hard cash is, of course, the most liquid asset that you can have, as you can easily use it whenever you want. Cash stored in savings accounts or checking accounts also fits under this category, since it can be withdrawn and spent relatively quickly. Other assets which can be easily sold, like stocks, are also liquid. This is because they can be quickly converted into cash without a major loss in value. Illiquid assets, on the other hand, are assets that cannot be easily converted into cash. The most popular example of this is real estate. This is because it could take months to sell a property, especially with all of the legal shenanigans. In order to liquidate a property quickly, you may sometimes have to sell it for below its market value. The market value may also be difficult to determine precisely, making it even more difficult to sell. Another example is collectibles. Collectibles, such as rare coins or stamps, require finding buyers to convert into cash, and in many cases, the nature of such collectibles make valuing them difficult. After all, they are only worth what someone is willing to pay for them. And finally, most personal property is a form of illiquid assets. Things like electronics and clothing can be converted into cash by using websites like eBay or by selling them locally, but many times you will need to sell them for below market value, and you may not find any buyers for your 3-year-old turned shirt. Just like assets, liabilities also come in many forms, but are usually grouped into short-term and long-term liabilities. Short-term liabilities, as the name suggests, are debts that have short time periods to be paid off without facing consequences. Credit card debts, for example, are short-term liabilities due to their very nature. Their high interest rates make paying them off over long periods of time inadvisable, and their no-interest grace periods typically only last for about a month. Payday loans are another obvious example of short-term debt. Those loans have to be paid off within a couple weeks, or maybe a month at best. In addition, the interest rates on these loans can be, and usually are, astronomical. Long-term liabilities, on the other hand, are paid off over longer periods of time, typically 5 years or more, and typically carry lower interest rates. Due to this, if properly used, long-term liabilities can be a form of good debt, unlike short-term liabilities, which almost never are. Mortgages are likely to be the best example of a long-term liability. These typically are repaid over periods between 15 and 30 years, carry lower interest rates than other debt, and can help rebuild your net worth. Certain auto loans also fall under long-term liabilities, since, though not always beneficial, they are usually repaid over longer periods of time. The same is true for business loans and student loans, since, like the other debts discussed, they are paid off over a very large time frame. When you have determined what all of your assets and liabilities are, you can determine your net worth. Your net worth is a good summary of your current financial situation, and is defined as your total assets less your total liability. This Excel format, which I will provide in the description below, is a great way to calculate your personal net worth. If you see here, it allows you to quickly enter your assets and liabilities, and find out your total current net worth. It says year 1 at the top, since you should be updating your balance sheet at least once a year, if not more frequently. This is an example of what your balance sheet might look like. The values here are random, but are plausible and serve to demonstrate typical asset and liability categories, and how to get their values. Obviously, you will not have the same assets or the same liabilities, but hopefully this can serve as a guide. If we first take a look at the assets, we see all of the liquid assets first, and the illiquid assets after. This balance sheet shows $150 in cash, $1,400 in total savings, $54.30 in a stock market account, and $100 in a prepaid debit card. At any point in time, an individual who owns these accounts could quickly convert them into cash for the amount stated. Next, we see the illiquid assets in multiple categories. This individual owns 2 properties with a total estimated value of $450,000. Notice how the assumptions used for these valuations may lead to some inaccuracies in determining the actual value, since a Zillow's estimate or a 1-year-old appraisal could yield an incorrect value. The same could be said about the used car, since while Kelley Blue Book does give a good estimate, it may not be 100% correct. These factors, in addition to the fact that it may take a while to sell to a buyer who's willing to pay near the full market value of the asset, make these illiquid assets. Next, the individual lists their personal property, including clothing, electronics, furniture, and collectibles. Typically, eBay prices are used for these valuations, but you should really remove a percentage of their value to account for fees and such when selling. If you own any businesses, they also fall under this category. These can be some of the most difficult items to value, as there are no comparables to compare a business to, and appraisal may be difficult. And finally, most retirement accounts are illiquid. While they are technically investments just like a brokerage account, you cannot typically access them without penalties until you reach a certain age. In the liabilities category, we see two subcategories, a short-term debt subcategory and a long-term debt subcategory. The short-term debts include all of the credit cards, payday loans, and even debts from friends and family that need to be quickly repaid. In the long-term debt category, all of the more bulky and longer-term debts are held. This individual took out 2 mortgages, one for their personal property and one for their rental, both of which are likely to be repaid over a term greater than 5 years. The same can be said about the auto loan. If the auto loan is a shorter-term one with a length of 2 or 3 years, it can be placed in the short-term category, but in this case it is placed as long-term debt. Student loans, which are also typically repaid over periods of longer than 5 years, are also placed here. And finally, this individual's business loan will also fall under this category. You can then see all of these categories and subcategories summed up. This individual has $33,809 in short-term liabilities, $839,149 in total assets, $678,238 in long-term liabilities, and $712,047 in total liabilities. Using our net worth equals assets minus liabilities formula, we see that this individual has a total net worth of $127,102 at this current time. Companies and businesses also use these types of balance sheets to report their assets, but that is a conversation for a later date. With this balance sheet, you can start to get a picture of what your finances look like. If you like this video, make sure to leave a like down below and subscribe. Leave a comment about what you want to see me discuss next, and as always, have a successful day.